Good morning. I want to welcome our witnesses and thank them for joining us today. Today's hearing is an opportunity for the committee to discuss the recent work of our prudential regulators and to highlight the strong alignment between their current approach under the Trump administration and our agenda here in the committee to make community banks, all depository institutions of all sizes, great again. Our shared objective is to ensure that regulatory policy supports the needs of the banks and credit unions that serve the hardworking Americans across this country. The supervisory and regulatory developments, rulemakings, and activities of the prudential regulators that we will highlight in today's hearings underscore that shared vision. Together, we can reduce the duplicative or untailored burdens on financial institutions of all sizes to ensure that they can continue to thrive in an increasingly competitive market. This hearing is about enhancing clear, tailored rules of the road, fostering competition, and ultimately serving the best interests of consumers and businesses. Committee Republicans have been working alongside the Trump administration from day one to ensure that community banks remain viable, competitive, and able to serve the needs of our local communities. To achieve our mutual goals, it's crucial that prudential regulators remain focused on their core mission to safeguard the fundamental stability, safety, and soundness of our financial institutions, rather than on trendy distractions that prioritize progressive climate agendas or DEI initiatives. That's why our committee's legislative and oversight agenda and the Trump administration are collaborating in leading the charge to shift our regulatory approach and return prudential supervision to this core mission. We saw what happens with the failure of Silicon Valley Bank when supervisors fail to keep their focus on the obvious, in plain sight material financial risks. This hearing will also emphasize the important reversal of costly, ill-conceived Biden-era regulations and guidance which would drive up costs and drive access for services down for American homebuyers and small businesses, most notably the original Basel III endgame proposal. I'm proud of the work the committee has done to advance legislation to provide clarity for the digital assets marketplace, streamline supervision, increase access to capital and deposit funding, ensure a fair supervisory appeals process, and establish a timely merger review process, among many others. It's critical that we continue this momentum towards transparent regulatory certainty and broader market competition. Clear, consistent rules reduce compliance costs for banks and credit unions. When these institutions can navigate regulations without ambiguity, they can allocate their resources more effectively, making loans cheaper and investing in customer service, technology, and innovation that benefits our entire economy. This committee has held numerous hearings throughout the 119th Congress to learn about how the actions of the regulators are affecting community banks and credit unions and their ability to serve our customers. We have heard time after time about the positive developments occurring at your agencies, as well as further ideas about right-sizing the supervisory and regulatory environment. As in the past, this Congress must find modern ways to enact effective and clear guidelines and expectations to enable financial institutions to operate in an increasingly diverse and dynamic financial system. I look forward to your testimony today, and I yield back the balance of my time.